Okay, good afternoon, everybody. So you're welcome to the Pipsoclock webinar. This is supposed to be a monthly, twice a month webinar. All right. So, and our focus today is on mastering Fibonacci retracements for successful trading. So, and before I come back to this screen, I want to quickly take you to Pipsoclock website. There's something I shared there this morning on the blog section. I'm sharing that. If you can see this Pipsoclock screen, type Pipsoclock in the chat box. If you can see the Pipsoclock screen, just type Pipsoclock. If you can see the Pipsoclock screen website, okay, great. All right. Now, there's a title there, Unlocking the Power of Fibonacci 50% Retracement Magic with Moving Average Crossing on the 1 hour time frame. This article, I just didn't remember I've not made a post on Fibonacci this since we began to prepare for this webinar. So I had to drop this morning, and what is here, take your time and go back to the blog and study it. Part of what we're going to talk about this afternoon is already contained in this blog. And if you had checked it earlier on, there was even a signal given on that. If you look at this chart here, this was a signal given around that 50%. And any of you that followed GBP/USD this afternoon would have noticed that price respected that and pulled back up and even rose up all the way here. So it's something interesting. You want to look at that, just go back and check that article, because I'm going to be speaking about this from this standpoint. Okay, so having said that, let's get back to the genesis of my journey with Fibonacci and why you should care about this tool. Okay, and that was as far back as 2007 when I just got started with Forex trading. And I remember we attended the Money in the Bank workshop at SADC that period for 1 week. And after learning the things we learned, so we got back. By then I was in Abeokuta, so I came all the way from Abeokuta to Lagos, spent 6 days from Monday to Saturday for that training. And we were about 52 in the class for Forex trading that period. But then, full of excitement, we all went back. I know some of my colleagues then, I remember some that said he was going to sell his car to put into Forex trading. And of course, myself, I zeroed my mind that I was going to collapse or whatever business I was doing in Abeokuta then and start trading Forex, which I did actually. I did that. But then within 2 weeks of starting, I blew the entire funds away. Don't forget, in a hurry, the Easter weekend of 2007. And up to today, I still try to figure out how I managed to survive with 2,000 Naira for a week, when that incident happened. But then the most interesting part of it is how I stumbled on Fibonacci retracements. When I got back to base, to Abeokuta, I went to the office the following Monday morning, all right, with the excitement I've learned to trade Forex, having contacted somebody earlier on then to teach me Forex trading, because I've seen, the adverts, this Forex industry is a gold mine. There's money on the street. You can pick money on the street. So I called the guy. The guy said he would teach me Forex in 4 hours for 50K as far back as 2007. And I'm like, in 4 hours, will I learn it? He said, yes, you'll learn it. I saw the advert on the newspaper, but I wasn't convinced. So when SADC announced the Money in the Bank workshop for intelligent investors piloted by the late founder of SADC, Dr. Sono Bazo Jagbase. So we attended. I paid 25,000 and we attended that. So when I got back, I was so excited, full of excitement. I found the gold mine. But on Monday, I came to the office, opened my computer, installed the MetaTrader 4 platform that we were told to install from the broker we were using then. After the installation, next thing I started staring the platform on the face, staring on my laptop, on my computer. It wasn't desktop, it wasn't laptop, it was a desktop computer. While staring at it, I couldn't understand Jack on the platform. After a while, I noticed something interesting. Tears started rolling down my eyes. I was like, what's going on? I was crying, really literally. Could I have wasted an entire week and 25K and didn't get anything? It was really, really such a bitter experience for me that day. So I shut down the computer, went away, came back the following day, looked at it. And then what I did later on was I now had to go online and start searching for help online. And that was in the course of searching for that help, I stumbled upon this website, FibonacciBook.com. How it came up, I can't remember. So I started reading about this to find a strategy to trade with. Because the entire training, I didn't learn a strategy throughout that 1 week. So, and then when I read and get to a point, if I'm stuck, I found the name of the author, the owner of the website, Jeb Boyd. So I copied his name, searched for his email on this website. I found it. So I went on my email. I will send him a question about this Fibonacci, what I've read. And by evening, at the end of the trading day, Jeff will reply me and give me a guide. So this continued for weeks. And that was why I got the faint understanding I had about Fibonacci retracements and loved it. It became a strategy I started working with. So the rest they say is history, because there are deeper things inside of it that I could actually unleash. So that was how I got to know this website, just by searching online. And it was actually from here that I learned about Fibonacci the first time before I enrolled in an academy that eventually gave me a clearer understanding on how I could actually choose to trade by Fibonacci. And that knowledge is what I want to pass on to you in this webinar. All right, so now I will quickly read a portion of this, then we'll get straight into the practical section of this, how it all started in line with our outline. If you have read anything about Fibonacci, you understand that Leonardo Fibonacci is a famous Italian mathematician who is a fan of a simple series of numbers that refer to the ratios valid for natural proportions of things on the planet. These ratios appear from the next number. The next numbers, you have 0, you have 1, then you have 1, you have 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, and so on. And found while performing next calculations that when you look at the first number, add it to this second number, you get, when you add first off, 0 is passed. Now, when you now see after 0, you have 1. So by the time you now add 0 and 1 together, you get 1. And then by the time you now add the next number, 1 plus 1, you have 2. So by the time you now add the two next numbers, 1 and 2, you have 3. 2 and 3, you have 5. 5 and 3, you have 8. 8 and 13, you have 21. 21 and 13, you have 34. 34 and 21, you have 55. 55 and 34, you have 89 in that order. That is how it's the numbers, he found that they appeared in sequence like that. So when he went ahead to measure the ratio of the numbers, so if to measure the ratio of any number to one of the next higher number, the result will be 0.618. Now, you may want to pull out your calculator at this point, for example, and then use 21 and 34. 21 over 34 will give you 0.618. But if you have to now measure the ratio between alternate numbers, for example, now you have 13 and 34. Alternate, that means you leave, if you call 13, you skip 21 and connect 24. You are going to get 0.382. You can punch your calculator to get that. I want you to quickly do that. And what I want you to do right now is to punch 89 divided by 233. I want you to give me the answer in the chat box. Get your calculator out, please. Punch 89 over 233. Let's have the answer in the chat box quickly. Let me be sure you are following on this. 89 divided by 233. Let's quickly see who the first to get that. what do you get? What do you get? 89 over 233. That's the alternate numbers. Can I have fastest fingers that could drop that first? Okay, thank you very much. Infinix Notes. Yes, next, can we get the one? It's not complete yet, though. With the complete number, at least the next four digits. All right. Can I have the next one? The next one. Who else has got that? Only one person. Okay, next. Yeah, very good. Yeah, Bumi, thank you very much. Who else? Who else? Yeah, thank you very much. Yes, that's great. Now, good. Teddy, good. Thank you. All right. So what you have there now, when you approximate, you have now, if you now want to turn it into percentage, if you want to turn it into percentage, thank you very much, Florence. Yes. So that's what I was just about to explain now. If you approximate it now, you have 0.382. Good. Thank you, Edron. Right, thank you. So now, if you now multiply by 100 in percentage, you now have 38.2. That's how we come about 32.8 retracement in the Fibonacci sequence. Okay, so you can find these proportions in nature, which is why these things are very valid, because you need to understand why it works. Because the way you know why it works, that will strengthen your confidence in the use of the tool. Okay, it works because it's been found in nature, found in science, found in architecture, found in music, found in arts. And so you can actually see a few examples of Fibonacci numbers in pine cones, sunflowers, pineapples, palm trees, spider webs, snail shells, DNA molecules, and millions of other things in the universe. So when you now apply it to forex charts, Fibonacci retracement levels are used as support and resistance levels. This is where it concerns you and I as traders. So you now have levels like 0.236, 0.382, 0.5, which is 50%, 0.618, 0.764, and so on, and so on, and so on. Now, so when you may not really know how to do the calculation, but your concern is to know how it was generated and why it works. So knowing why it works, so that when you plot it, you follow what the system says. The major problem traders face is allowing emotional interference when trading. And when you always allow emotional interference, you see, there's only so much your emotion can hold, which is why you need systems. Okay, and you can use these tools and come up with systems that when they give you signals, you follow it. If it fails, it is the system and not you. Because when people battle with strategies, they battle with signals. Your system has generated a signal, and for one reason or the other, the signal didn't deliver profit that day. You begin to kill yourself. You want to make sure you avenge the market. You want to make sure that it is right. It's not about you. If you remove yourself and allow the system to step in, you find out that sometimes the system will win, sometimes it will lose. But yours is to now study the system to understand the best conditions for you to work best, and also know when it's to follow the system. So when you understand the system, you know, okay, this system, when I look at it over time, it is approximately 70%, 80%, or even 90% success. We have success rate of 80, 70, or 90%. So guess what? You now bring in to plan your risk management strategy around your system, so that whatever the outcome, it is the system that you follow. It's not about you. But your own part, your own rule comes into play because you have disciplined yourself to be a system follower. And that's how you become a successful trader, a consistently successful trader. So if you do not follow systems, you have issues. That's how you can make it today. And any day you allow emotions to step in or set in, you make it today, you lose more tomorrow. But even at that, if at any point you realize that, hey, my emotions are getting in the way, let me get out of the way and let the system work, you find out that you'll be successful. So on this note, I will be switching over to the charts so that we'll demonstrate these levels in action. Now, there's also the Fibonacci extension levels, which I use as targets. But what I'm going to show us today, I'm not going to work with the Fibonacci extension levels. I'm only going to work with the these retracement levels, but of these retracement levels, I'm only working with 50% level today. I'm going to show you how I use it and how you too can apply it to your trading, because what we want here right now is simplicity. So we're going to be working with Fibonacci retracement of 50%. That's why I said read that article on pipsoclock.com on the blog post there on the Fibonacci retracement. Okay, so how do we apply that? So let me quickly share the next screen. Let me share the next screen. So I'm sure you can see that chart. Can you see the MT4 platform? If you can see that, type MT4 there. You can see my screen, type MT4. If you can see the chart there, type MT4. Type MT4. If you can see the chart, type MT4. Okay, great. Thank you very much. Thank you. Right. Okay, good. Now, the article you saw, I told you to check on pipsoclock.com. This was where I generated that image from here in the morning. Okay, now we are going to be working with what we have here right now. So I'm going to remove this so that I can start from the basics. First off, let me remove the indicators too, so that I know there are some people who may be beginners here, because at this point, we want to carry everybody. Anyway, before I continue, I think I need to be sure. Please, if you are new to trading, Forex trading, and you are new to the platform I'm just showing right now, I want you to also type new. If you are new to Forex trading here, type new so that I will know how I will carry you along. You are new to Forex trading, type new, type new. If you are new to Forex trading, I want to see new there. All right, David, thank you. Who else is new here? Okay, Florence is new. Who else? Who else? All right, Nokia G21. All right. Okay, new. Thank you. Okay, good. So first things first. Okay, in addition to this, if you're already a registered member of the community and you are new, there is a beginner's course in the members area and the Pipsoclock website. So when you log into your back office in Pipsoclock, your members area, go to courses. There's a beginner's course there. It's a work in progress. So you can start from there. Gradually, you can get familiar with this platform, because there's a need to get familiar with this platform. Because what I'll be doing here now, so you can find some fluidity as I'm moving. You understand why it's so. So please, after this, get back to the platform on the Pipsoclock website, log into your account, go to the courses section, and select the beginners course. It's the modules rather. I think currently the latest upload there is module 3, lesson 2. So get down there and start from there. And we are updating it. We'll continue with it for as long as it takes, because the system we're using there, though you'll find out the system there. So let me continue with this. So when you want to use Fibonacci, right? First things first, you need to know the trend of the market. So probably you may want to use find out the trend from one daily time frame. But then if you now switch back, when you now find out from the daily time frame, like if you look at here now, the market is trending downward. This is a downtrending market from here where my cursor is, all the way to this. This is a downtrend, right? This is a bearish market. But then you have in-betweens in the market, and that's why in the Fibonacci strategy we are teaching today, we are going to be using the 1 hour time frame. All right, so you can actually use Fibonacci can be best used to trade daily, 4 hours, 1 hour, for 30 minutes, 50 minutes. But my preference here is 1 hour, which is what I'll be teaching you with, 1 hour. Okay, so we're going to be taking it the way it is here, because in between the times, after the bigger trend, you have an intermediate trend, then you have the immediate trend. So based on that today is NFP day, and the news has come out, NFP report favors the US dollar, but the unemployment rate is bad. So that's why you see what's happening. So there's kind of confusion in the market right now. Okay, so investors are thinking, should we buy, should we sell? Even though the initial reaction is the bullish move that we have here. Okay, so the indicator we are going to be using for this, we are going to be using the indicator, moving average indicators. I want to quickly bring that out. Let me move this. Okay. Okay, so I'll bring out the moving average indicators. First, we are going to be using two moving average indicators because we are talking about moving average crossing here. So we use the 200 period moving average. I'm using the method explanation. Can use simple or anyone you like, right? So I'll use the white color to represent the 200 period moving average, and then I'll bring the second one to moving average crossing. Okay, then we're going to use 50 at this point, and let me use the color magenta for it. So here we are. This one is settled. So this one is going to help us when there's a confluence between the moving averages, the crossing, and the Fibonacci levels, then we're taking action. But we are going to be working with the moving average 50 retracement. We're going to be working with moving average 50 retracements. Okay. If you can't access which platform, the Pipsoclock platform, I'll come to take the question. We'll take questions later on. Okay, go ahead and drop a question. That will be taken care of later on. All right. So now, so we have the moving averages now. So the next thing I'll be bringing in now, what I'm going to be bringing in now about is the Fibonacci retracements. Now, for you to use Fibonacci, you must know the trend. It's very important. If the trend is not clear, it may not make sense. You will just waste time in the market. So, but then you will find a trend and take it. If you want to use the immediate ones, like as it is right now, you can just use the current what is happening right now, currently what's happening right now, and take your decisions. Whether you stay long. Besides, today is Friday, and at this time now, I don't expect anybody to still be in this market, okay? Because for maybe 90% of the time or 80% of the time, the market ranges, okay? And for the rest of other time, sorry, yes, maybe 10% or 20% it trends. So that's why you'll be seeing something like this happening here, like there's nothing going on because it's ranging. And when it's ranging like that, what is preparing for? Gradually, it will prepare to break out. Okay, so, but now I'm going to just make an assumption, assuming that I have a trend in place right now, and this is an uptrend. And one other way to know the trend based on your time frame you have chosen is to use the moving average, the moving averages. Now, the 200 moving average, whenever price is trading above the moving average, you say it's uptrend. And whenever it's below the moving average, you say it's downtrend. For like currently, price is above the moving average, so it's an uptrending market. Even though the trend, the moving average is also speaks volumes about the trend. So what we have here is an uptrend based on price trading above the moving averages. So next is now plot the moving average to plot the Fibonacci retracements. Okay, so we're going to plot now. Traditionally, they will tell you if you have an uptrend, plot from down up, from behind to the current one. But the strategy I use, which I'm teaching you here, we plot from the, if it's an uptrend, I'll plot from the top and connect to the low. All right? So that's the way I plot it. And that's the way I encourage you to do so too. So having done that, so where I have now, look at the levels now, and you might see that if you have your platform, you may want to, if you have your platform on, right, and you may want to try out what I'm doing, or if you are watching this later on, you may want to try this out, and you will find out that if you plot it, you will not see everything that I have on my string. For example, here from 100% at 1.27129, just give me the price so that I will know the price. I won't have to start calculating. All right, so that's what that is. 61.8% at 1.26850 and 50% at 1.26764. Actually, this is what I'm looking for, 50% retracement. Now, you may not be able to find, you may not see your own that way. I have to customize it, and the simple way to customize that is this. I double click on this, right click. I will show you how you can do that. So you can see once you come to each one, like here, what I added is after zero, I added at percent dollar. So you can add that to all the levels at percent dollar, at percent dollar. And that is what will give you this level. So that when you put, see, replacement level 100, at 1.27129, replacement 50% at 1. Those prices, right? Now, so with this now, what I have, okay, let's assume it's trending, because on a normal day, I won't trade this market right now because it's looking flat to me. But for the purpose of this class, I'm going to use it to show you. So it's very simple, and the class will be, I will then take questions. So we are trading at 50%. So you can see moving average had crossed already. The 50 is already above 200. And price currently, we see that, okay, it's up and it's at 50%. So where it is right now, it's a buy level. So what I'll just do is to check, okay, if I buy here at 50%, my stop loss would be below this zero at 0.000%, which is 1.26398. You just deduct 5 pips from that price. So we have 1.26348. So which will give me around 348, will give me around 36348, should be around 348, right? That should be around good, around 41.7 pips. Okay, 41.7 pips. Now, if you look at 200 level here, that's around 35.7 pips. So that's not your target. Where you have 100, what's it called, 1.27122 or 129 rather, it's not your target. But I'll explain that portion to you now. Where your target is here. Let me quickly drag this. See your target. Your target for profit is 161.8%, which is at 1.27581. So if I bring the crosshair again, I'll put at 50% retracement here, and then the stop loss, of course, is at 41.7%, right? And then I target here, see my target here, which is, okay, so around 84%, 81.4 pips. Excuse me. So you can see that the risk to reward ratio there is 1 to 2 risk to reward ratio. Now, when you enter, like if I enter a trade here, I'm going to place a trade based on that, put my stop loss at, take first of all 0.01. Risk management is very important. Then 1.26348, and then the target 1.27581. 27581. Okay, so I placed the trade. It has already jumped up already. You can see. So you use penny order, like buy limit order. If price is not there to get the, but then if we have taken it at that point, but let me still take it at that point though. But then see where we're supposed to take it at 50%. So alternatively, I would have just set a buy limit order. So when you set it at that point, you can look at this now. Target at 70, it has reduced because I took it above 50% instead of at exactly 50%. But for the purpose of this class, I had to do that. But the stop loss is at now 47.7% instead of 41.7. You know that. Now, if price now goes in your favor, remember when you are taking trades as a trader, you are a speculator. As a speculator, you are assuming, you are predicting that this is what is going to happen. And so if it happens as you have predicted it, you win. If it goes against you, you lose. That is the lot of speculators. That's the lot of speculators. That's trading for you. That's the way trading is. Okay, so as it is now, we have speculated that this is what's going to happen. So if he rises and gets to 100, if he gets to 100, what will you do? At that point, you will move your stop loss to your entry to that 50%. Okay, and then allow it to work to finish the trading. But if it says, well, you are wrong, and it comes down here, like I told you that this trend is weak for me. So, but then for the purpose of this class, I have taken the trade. And then actually it's right. It gets here, you just move your stop loss to your entry, and that's it. So you now allow it to finish. But then by the time you've got your entry, now you have been trading before, you know what you have been always getting before this time. So if it gets to that 100, and you think that maybe he has done 50 pips for you, and getting 50 pips have been a Herculean task for you over time, at that point, you might decide to, if you have entered with 0.2, you can decide to take 50% of the profit, or just take the entire profit and wait and then get out. Now, what if price is already trading above that 50% before you join the market. Yours is just to, and it's trending. You just need to keep waiting. Keep waiting until price finds an entry level again. For example, now, if, for example, price, what do I want to say now? If, for example, now, price gets up here, and then it couldn't enter, it couldn't find entry points, and then it continues going up, and it's still bullish. All right, it records a new high than this. Let's assume it records a new high above this point. Okay, so what you do, and you see that it's still trending, guess what you need to do at that point? What you just do is that you adjust the Fibonacci to that point. Okay, and if you adjust it to that point, you see that your entry will change, and then that will also increase your risk. But then it will also increase your target. You can see that the target has also moved. So the two things three things will adjust if price rises and gets to this 100% without you entering. Because you may say, okay, I've plotted it and I set my buy limit order or sell limit order at 50%, and price didn't get down to touch it. Not to worry. What it simply means that you've missed that tide. And knowing that in trending markets, you have classes or categories of trends. You have the primary trend, you have the minor trend, and you have the counter trend, right? The secondary trend, rather, sorry. You have the secondary trend, you have the primary trend, the minor trend, and the secondary trend. Now, when you have missed the primary trend, the next place to wait for is the secondary trend. Okay, so which is why, for example, here, you see price picking up at this point. If you can see where I pointed, this is the date there is 29th of August at 15 hours. Price picking up at this point, and then it rose all the way here, okay, and then retraces back. The retracing back, if you're waiting, if you have missed it here, the next place you can wait for is the secondary level here to enter. And if you enter here, if you are still here waiting that it must come there to wait for you, that means you have an entitlement mentality. So you don't want to have an entitlement mentality. So you have gone to the secondary side, you join the secondary side and follow it to this point. So yeah, you miss the first side, follow the second side. And if you miss the second side, it has got here, it's coming back. It's coming back. So you can join it at this point. All right, even though it's no longer trending at this point. So at this point, not trending, you want to stay away. So now, if you have missed it at this point and it has gotten up here, all you just need is to adjust you can see that the 50% has now adjusted from where it was before when you use this high as your 100%. So yeah, you adjust from there to here. So next, you now wait for it to retrace to 50%. Now you enter. What if it doesn't get there and it moves up again? So what you just do, you keep following it until it meets you. Is when you now notice that the thing don't pass your this and you don't have the time to keep waiting again, then you might decide to forget the trade. Another day, another opportunity will come. Don't try to kill yourself in any particular opportunity, because opportunities come and they go. And sometimes too, you find out that yes, he has taken your trade and he's doing well. Okay, he gets to 100% and he wants to retrace. If you think that you don't have the nerves to watch it, you can imagine that you make 90 pips because you wanted to get to that target, which is 150 pips, and you allow everything to evaporate, because sometimes the market can do that. Okay, so instead of you have not seen 90 pips before, take it and go, except you have maybe more than one lot size, like you have 0.02 or 0.2 or 2 lots, then you decide to take 50% and then let the rest. Now you draw your stop loss to break even and let the market decide. Where you don't have such, and you have not seen 50 pips before, take your 50 pips and walk away. You know who wants to be a millionaire? You have made 1 million, and then the next question comes, and it's a tough puzzle. You are not sure. If you guess and you lose it, you draw back to 250. What do? You walk away with your 1 million rather than trying to get 1.5 or to get 5 million and you lose entire 750,000. So you can operate that way as a trader, because as a trader, you are purely a speculator. So as this one is now, price, I don't want to be talking about all of these levels now, because each of these levels are important. Although 50% retracement really is not so much seen as a a Fibonacci level, but it's a psychological level for traders, which is why it works. And that's why I use it to trade this system with the moving averages. Now, I've used 200 period and 50 period moving averages. It's not cast on stone. You can decide to adjust your own moving average period to maybe from 200 to 50 and from 20 to 21. You can use any one. All you need is get something that works for you. There's nothing that's cast on stone here. Okay, that's why the way I plotted it here, traditionally, if you study books, the way I plotted it is not the way it's plotted traditionally, but I adopted this and it's working for me, and that's what I've come to teach you. All right, so that's about this, and I believe it's simple enough for you to apply it and see results. If you've got value from this afternoon, I want you to type fantastic in the chat box. You've got type fantastic in the chat. If you've got value from what I've just explained right now, can I see you type fantastic in the chat box? Let me be sure you are hearing me before I make progress. If you have got some value, type fantastic. Thank you, Jija Lewis. Thank you very much. If you've got value, is he the only one that's got value here? If you've got value, type fantastic in the chat box. Okay, thank you. Thank you very much. All right, Godwin, thank you. If you've got value, all right, thank you, Michael. Thank you, thank you, thank you, Ojigekene. Thank you very much. All right, Philip, thank you, fantabulous. Thank you very much. All right, so thank you for this time out with you and explaining this. I remember all you need is to go back and practice it, but please take notes. When the market is not trending like it is here now, you want to stay away. I just did that because I needed to demonstrate, how this works. But on a good day, I won't take this because it's not a good one. If you put this market, if you enter this market here, you can stay here and drag and you become so tired. But if you take it on a trending market, within a few minutes, 1 hour, the market has delivered your profits or you find out what you have, all right? So repeating the entry, if you can repeat the entry. All I just did, I'm using 50% on the entry. For example, I'm bringing it back here. God said I should repeat the entry. God said I should repeat the entry. Now, I first off, I said, with the way it is now, this market is not trending. And you don't use Fibonacci in a trendless market. That was the first caveat I sounded. So, but as it is, for the purpose of this class, let's plot it based on what just happened from here to here. Because ideally, if you really go from the daily time frame, this is a downtrending market that is just resting and will still pick up. But then we are not running from there. So from 1 hour, we use this. So, and we plotted it and say from what we have here now, 50% is where we are trading from. Okay, so even at right now, it's at 38%. If I see it at 38%, it's a trending market, sincerely, and this intersection has happened here, or confluence has happened here, the moving average crossing, and then the levels here, you buy at 50%. So if I see it has crossed 50%, since target is, stop loss target is below, 5 pips below the 0% level here. So I can now say I will buy where it is right now because already it's a better price for me than 50%. The 50% is the entry target. So I can now place my stop loss order. And remember, stop loss will say you place it at 5 pips below the price, zero price here, which is 1.26348. So 1.26348. And target, you will drag this to find the target there, 1.27581. So target 1.27581. Okay, and then you place your buy order. So when you place that now, you will now find out that for this very one, now let me close this first one. For this very one now, you will find out that for this new order, so you can find it, you can see that the risk has reduced to 31, but the target has at 50%. I found it, I met it at 38.2%. So I still took it because if I were here already, I would have taken it at 50% and my risk would have been about 41.7%. So that's how the entry is done. Okay. So, and the trading platform we're using here is Scaling Trading Platform. All right. So I want to draw the curtain at this point. You can watch this video again from the members area, and you will find it there. It will be uploaded there. So you can watch it again, and I'll want to leave the floor for your questions when it's time for the question. Thank you very much for your time. Thank you very much. Thank you very much. God bless you. Lekon, you want to take over?
All right, thank you so much, Mr. Ifeanyi. Thank you for that session. Just before I continue, I'd like to confirm if you can all hear me. If you can hear me, just drop a message in the chat box to let me know that you can hear me. Okay, thank you so much for the confirmation. Thank you. So we will proceed. However, I want to let you know that if you have any question, please put the question right now in the chat box. You can either put it in the chat box right now, or you can wait. In the next few minutes. We'll also have that session for questions and answer. So if you do not put it in the chat box, at that point, you'll also be able to raise your hand so that you can unmute your mic and ask your question. So, but if you already have your question, you can just put it in the chat box and Mr. Ifeanyi will answer all of them. Before the FAQ, we want to quickly take you through the products and services of skilling. And I have Mercy here who would take us through that session, the products and services of skilling. Mercy, please confirm if you are ready. If you are ready, you have the floor.
Hi, everyone. How are you today? Okay, good afternoon, everyone. Could you please put up my slides, share with you what skilling is about and all the benefits that you stand to enjoy being with skilling. So yeah, skilling Forex broker is it's a globally regulated Forex broker. It's available they are based in 5 European countries: Cyprus, Spain, London, Malta, so in 5 different locations. Could you slide to the next slide? So skilling is, like I said, globally regulated broker, a Scandinavian-owned broker. It has a heritage of trust, transparency, and fairness. And what this means is that you can expect to have a fair dealings on your trades, no shady dealings, no fraudulent activities whatsoever. What you see is what you get with skilling. Also, like I said, it's regulated by the Seychelles Financial Services Authority. So if you are wondering, and then with that, and when because the broker is regulated, what you can expect is also that your funds and data is safe. So I know that some clients will be wondering, they're asking for my BVN. I don't want to give that. Don't worry, whatever skilling asks you to send is safe because it's a regulated broker. So they have a body binding them, and so you cannot find any of your details cannot be shared with a third party. As a matter of fact, we can't even send your details to them on your behalf. It has to come from you. So so rest assured, you are in the right place and in the right hands with skilling. Also, so next slide. What do you get with skilling? What are the things? Why should you trade with skilling? Yeah, enjoy superior trading conditions on skilling. Skilling has over 900 plus instruments, financial instruments, currency pairs, shares of you can even trade shares of companies, popular commodities, indices, gold, anything you're looking for. Over 900 plus instruments is what you will find on skilling, and spread is from as low as 0.1. That's it. No commission, no hidden charges. All fees are clearly displayed on your account currency. No hidden charges whatsoever. The platform is intuitive and user-friendly trading experience. Also, great customer service, and also you choose the leverage is up to 1,000, and you can choose which trading platform you would like to. So skilling has the skilling own platform. That's the trading platform designed by skilling itself. You can also trade on MT4 and C-Trader. So if you're looking for an advanced trading platform, skilling doesn't have MT5, but you can use C-Trader. It's as advanced as the MT5 platform. The next slide. And then, of course, leverage up to 1,000. So what are the things you get on skilling? For everyone who is making their first deposit on skilling, you can get the $30 welcome bonus. And the bonus is such that you can trade with it for as long as you want and withdraw all your profits. So when you get the bonus, when you complete your verification, fund your account, the bonus is automatically credited into your account. The bonus is for you to trade with for as long, so you determine how long you want the bonus to stay in your account. I mean, if you don't lose out on your trades quickly, the bonus will be there in your account till of course till whenever. The next thing, I think the next thing will also be that Yes, on Thursdays, like yesterday, Skilling sent, a notification. Also, Skilling has the app. They have the app. So when you download the app, you're able to get notification. Skilling does something every Thursday where particular instrument, specially selected instrument, it will be announced to you. Like, so you get a notification either via the app, you get a notification on your phone or via email to let you know the currency pair of the day or the instrument of the day that you can trade with, with zero spread, no commission. So when you can look forward to that every Thursday, you get an email or a notification on the app, and so you know which currency pair it is to trade on that day, and then there are no charges for that particular currency. Now you can also get $10,000 cash back. So Skilling does cashback, or what we know as rebate. So it means that as you're trading at the beginning of every month, you can get real withdrawable cash deposited into your account with every trade that you close. So every trade that you close in a month, let's say that as this month is starting, you start to trade from now to the end of September. By November, by October, you get an accumulated sum of the cashback that you have, accumulated over the month of September, and it will be refunded back into your account. Then you can look out for the $888 lucky money. So what the lucky money is about is deposit from $1,000, trade 10 lots across 3 asset classes. So for example, trade indices, trade forex majors, trade NASDAQ, for example, 3 different asset classes, 10 lots altogether. Once you hit, that's all that you need to do. Once you trade 10 lots across 3 asset classes, you qualify for the $888 lucky money. And then to get it, you just send an email to campaigns@skilling.com, and then the funds will be credited into your account, and you can now trade with the funds and withdraw all of your profit. So you cannot withdraw the money itself, but all of your profit is withdrawable when you get the $888 lucky money. I think that's about it. If you have any questions about the Skilling platform, you have any question whatsoever, please just leave it in the comment section and I will respond to them. Thank you so much. If you have not started trading on Skilling, now is the time.
Thank you so much, Mercy, for that presentation. So Mercy has just quickly taken us through the products and services of Skilling. Also, I would like to invite Mrs. Adams, who will quickly take us through the verification process, because for you to get started and to enjoy all these benefits, you have to register and then you have to complete your verification. Verification is easy and straightforward. Mrs. Adams will quickly take us through that right now. Are you set?
Yeah, thank you, Leko. Okay, good afternoon, everyone. It's been amazing. Before I please, those of us that are here, I want to know how many people I'll be putting through. Hello, can you hear me, please? If you are here to verify your accounts, please type 11 in the chat box. Or I will just assume everyone here has been verified. Okay, Mr. Godwin. Okay, Mr. Lewis, Mr. Godwin, you haven't verified your account. So I believe after this, you just, there to verify your account. Okay, so to verify, I'll just go straight into it. There are very simple steps, and then you need just 2 documents. And then right away your account gets verified, and then you can start to benefit from all of the offers and promotion Mercy mentioned earlier. So to verify, you log on to skilling.com, click on login. If you have already activated your account, it will bring you to this page. If you haven't activated your account, it will send a link to you for you to activate. So once you have this page, If you have activated and then you've forgotten your password, what you need to do is click on, forget password. If you understand if you can remember your password, what you just need to do is then log in. And then after logging in, it will take you directly to this pop-up box for you to click and then verify your account. So what you need to do is to click on that verify button to upload your details. It will ask you to upload your POI, which is your proof of identification. We have different documents that set based on the document you have. We have the international passport, that's the passport, national ID card. Under this national identity card, we have you can upload your name or your voter's card in this category. Then if you have your driver's license. However, whichever document you are uploading, ensure that it has your name, your photo on it, and then the document is not 10 years and above. If it's up to 10 years and above, that means it's expired. That is what that is termed to be. So I believe that most Nigerians, we have the name slip. So once you click on that, you upload your name slip. You are expected to upload both the front and the back page. Some name slip have a blank page at the back. Don't worry, we understand and we know how it's works there in Nigeria. So just upload it that way. Ensure that your details are correctly captured on it. Once you've uploaded your proof of identification, it takes you to the next page where you have to upload your POA, which is your proof of home address. And we have quite a number of requirements here. You just need to pick one of it, either your utility bill, bank statement, or any of the listed documents. So I would use bank statement as an example. So whichever documents you are selecting and uploading, ensure that the proof of address has your name and your address. Your name and your address. So for example, if you select utility bill, ensure that it carries your name and address. So some of us do not own a house here, so you can use your bank statement. Your bank statement will surely have your name and address on it. So Mr. Godwin, Mr. Lewis, I hope you're taking note of this. So just 2 documents, your ID card and then your proof of address. Verification takes same day and then you get verified. But if you notify us, because we have influx of documents coming in, if you notify us that I just uploaded my document, we can help you follow it up and then get it verified immediately. All right. So okay. So Mr. Godwin, Mr. Lewis, I would expect to see you upload your documents after this webinar, and then we can quickly help you review those documents. Thank you. I would hand over back to you.
Thank you so much. Thank you so much, Mrs. Adams. So I want to believe that Mr. Godwin, Mr. Lewis, and anyone who has not completed a verification got that correctly, and you should go through the process. So we'll get back to the questions and answers. So we have a couple of questions here. We have, I want to confirm, Mr. Ifeanyi, are you available for the questions?
Yes, I'm here.
So we have a question from someone. My question is, please explain the plotting of the FB2 again, because this is actually not the traditional way. Can you respond to that?
Yes, I won't be able to show my screen right now because I've logged out from the computer right now. I'm using the phone. So now instead of, let's say you have an uptrend, is an uptrending market. You have the high at 1.2650. All right, that's the high. And then the low, and the high is the current time where that's the high that is, okay, let's say the low was recorded at, what time is it now? This is 3 p.m., right? The low was recorded at 1 p.m. That means it's behind at 1.2500. And then the high recorded at 3 p.m. at 1.2650. So you can see that the high came last and the low came first. So now and it's an uptrend, instead of you to connect, you pick the Fibonacci, instead of you to connect it from bottom up, you connect it from top, that means from the high at 1.2650 down to 1.2500, which is the low. And so that when you do that, you will now be able to find the 50%. So at that point now, your entries are 50% and your stop loss is below 5 pips below 0%, while your target is at 161.8%. Then if it gets to 100%, you move your stop loss to entry level. That way you have protected that trade. Now, if you have been following some of our trading signals, there are some of them when I tell you to move to entry, and then if it gets to so and so level, you move your stop loss. Outside of those ones, there are some signals that will say when it does 10 pips, move your stop loss to entry. That one is not Fibonacci. But the one will say when it gets to so and so price, move your stop loss to entry. That one is Fibonacci generated trading signal. So you plot it, if it's an uptrend, from top down. If it's a downtrend, you plot it from down up. Because if it's downtrend, 100% should be below the price. If it's uptrend, 100% should be above the price. I hope that answers the question. Thank you.
Okay, thank you, Mr. Ifeanyi.
I hope you understand. Let the person respond. I hope you understand my explanation.
Yeah. Please confirm if the explanation is clear. That was asked by, I don't know whether this is a mistake.
Except it's no longer online.
Yeah, is it Mr. Luis?
Okay, he understands. He understands. Yes, he has responded. He understands. Thank you.
Okay, thank you. Thank you. I can see Mr. Godwin and Florence raising their hand. So I'll call on Florence first. Please unmute and ask your question.
Are you hearing me?
Yeah, good afternoon.
Yes.
I actually is part of the promise that before I register. I remember the last webinar when I told you that this thing is presented. I'm just a new person in forest. I don't know how would you people carry me along. So if you may mention that once you register, that you try to create at least a class for us. So that you register. I'm registered this August, and each time I call this madam, she will keep telling me that you are the one that will fix, you are the one. I said, but this is what you told me before I now deposited my money. So I don't know, because I like clarity.
Okay. All right. Yeah.
Now one more part. I've not even started reading. So I've learned the terminologies and all this. I've done the theoretical for the entry level, the main practical, I've not known.
Okay. Though your line is a bit faint, but I can hear you. Okay, so now I explained while I was taking the class. When you log into your members area, go to courses. You see the Pipsoclock Beginners Forex Trading course. There's Pipsoclock Beginners Forex Trading course. As at this morning, I just uploaded module 3, lesson 2. So module 1 has been completely uploaded. Basics from beginning. Module 2 has been completely uploaded. Then we are on module 3, lesson 2 was just uploaded this morning. So if you have been checking your members area, you will see that these things have been there since August, maybe 2nd or 3rd week of August. So get back to your members area at pipsoclock.com. Go to courses. You see Pipsoclock Beginners Forex Trading course. It's arranged in modules.
So you see module 1, module 2, module 3. So currently, as of this morning, if you have checked this morning, you see module 3, lesson 2. And we'll continue like that. Now, these are recorded when the market sessions are on. The only one I might record on a weekend, and they are recorded as we are speaking, as in, it's not an old recorded video, it's as the market is on. So now we are entering weekend tomorrow, Saturday. If there's any recording we will do tomorrow, it will be something that will not be on the charts. But from Monday, when the markets are open, because inside the course there, I thought of taking us on 2 systems, but at some point I said, okay, no, it's better we focus on 1 system. Because if you learn with 1 system, master it for 1 year without you, because by the time you come into Forex, you find out that there are so many shiny objects. And if you keep chasing after these shiny objects, you have problems. So focus on the simple system that is taught in this beginner's course. I assure you, at the end of 1 year, you understand that you are a good trader. You have understood trading. Then you can begin to attempt other strategies. So get back to your members area, go to courses, and you see Pipsoclock Beginners Forex Trading course, and start taking them from module 1. Module 3, lesson 3 will come up on Monday. And then from there, we'll enter module 4, because of them we'll start diving deeper into the trading system proper. By the time you are done, you'll be well-grounded. And of course, as we are progressing, we remember that we are just evolving. Pipsoclock is evolving, all right? So as we continue, we to come to a time where we will now gather everybody who has taken the beginner's course, and we gather like this online, and then I'll have a forum where we can begin to ask questions within the community. We'll get to that. Everything is just coming up step by step by step by step. So get back to your members area and you'll access the course. Thank you.
Okay, thank you, Mr. Ifeanyi. Madam Florence, I want to believe you got that correctly. So we go back to work, and we have series of videos that are already, as I speak, already in the member area. So please just get to them, and we will do well to organize, just like Mr. Ifeanyi has said, to organize a session solely for beginners, and beginners who have gone through those lessons in the members area, so that we can take questions and any other thing you want to do. I believe that answers your question, Madam Florence.
My another question now, I heard that now I have not started trading, but people would have told me that this is the process. I wouldn't have paid the money. I would have gone through this process before I paid, before I deposit my money.
Okay, is the money still in the account?
Let me answer her, please. Let me answer. Madam, please let me answer her. Madam, ordinarily, the course you are accessing right now, if you go to the members area, you see the course. With the condition we gave you to access the course is to fund your account. And ideally, I could have also told you, or anybody out there could have told you, pay me so and so amount and get the course. And that money you pay is not going to be your money again. It belongs to the owner. I could have also asked you to do that. But you have funded the account, the money is in your account. And if you follow the instructions in the course, you won't touch that your money until you follow the instructions, do demo trading, understand it, then you come back to trade profitably. Do you understand? So I could have as well told you, pay me, how much did you fund the account with, 25,000 or 30,000? And I'll take you through that beginner's course. And then you can look for money and fund your account. Which one would you have preferred? So what we told you is a condition. Fund your account, and then you access the course. And you have funded the account. The course is there. Just calm down and access the course. All right? Access the course. Be patient. Don't be in a hurry to go and trade your money. Follow the instructions in the course. That's how you become a good trader. But if you want to rush, you want to start trading your money, you might blow your money away before you learn to trade. And that we don't want you to do that. I hope you understand. Thank you.
Okay, thank you.
All right, thank you. Thank you, Ma. I want to believe that that's sorted. And However, after now, if you have any question, please, I'm sure you have Mrs. Adams' phone number or email. You can always reach out to us via phone or email. We are always ready to be of help. So I will move on to Mr. Godwin. Please ask your question.
Good afternoon, everybody.
Good afternoon, sir.
Yeah, I'm happy to be with you this afternoon. If you are familiar with this case, you know that this case has been following you while you were with the Interforest. So I have 3 questions, but one has been answered. The first one is like an kind of inquiry. Like it took me by surprise when people left the Interforest, and I still have my point being picked up there. So I would want a situation whereby if you can give me a clue how to get my funds that later, because I have almost $400 with them at the time you left. So if there's anything, maybe you can just give me an idea of how to get my funds. Because I joined you just on the purpose of what you are doing. Because your idea of training beginners is okay. You give everything that is needed. That is what they do in trading. So that is number 1. Number 2. Tiffany, I thank you so much for this Fibonacci Retracement lecture. It's very, very interesting. In fact, when I saw the notice, I put it in my study calendar. I said that I will attend to this program or whatever you call it. I really keep trying to follow you, even though I was a little bit late. But immediately I joined, I was able to follow you. But the question I have there is, I want to ask you, how do you find the direction? Is it by, do you do top-down analysis, or you just get into 1 hour time frame and you determine where the direction is going? That's my question. So the third one you have already answered it, because that is based on record. If the recordings are available, when you are answering the other lady, one can access the recordings. So thank you.
All right. Thank you very much, Mr. Godwin. All right. So the trend, it doesn't take away any method you use to determine the trend. All right. Now you can, first of all, do from top down. You can decide to check, let me know what is happening on the monthly chart time frame, down to weekly, to daily, to 4 hours. Remember that every time frame has its own message in terms of the trend. So now, if you want to follow what each of them is saying at a particular time, you can get confused. So the best way to do it, now even the Fibonacci plotting too, you can decide to plot from 4 hours or from daily or 1 hour or 50 minutes or 30 minutes. But over time, I've come to understand that 1 hour appears to be the simplest. All right. So, and it's in between because it's the middle line between you have daily, weekly 4 hours, and then 30 minutes, 15 minutes, 5 minutes, and so on. So I find 1 hour to be the meeting point. And also realizing that in Fibonacci, the Fibonacci levels I'm using, 50% may not only be said to be a strictly Fibonacci level, but because it's a very strong psychological level, meaning when price gets to that level, it tends to respect it. So it can be adopted. That's why we use it. So if you want to use the trend, like now introduce your moving averages, whether it's 200 moving average and 50 moving average, or 50 moving average and 21 moving average, whichever one that is your choice, so that these things are not cast on stone. So once you see, even by the time you even look at the market, that you're on 1 hour, you just look at it, it can even tell you that this is an uptrend. And then moving average, price is above moving average, that is an uptrend. Or price is below moving average, it's a downtrend. So once you can identify that, and the sloping is good, like what we saw this afternoon, within the range we analyzed, the market was choppy. So it's not even good to trade at that with what we saw this afternoon. But if it's a trending, well-sloping market up or down, then on that same 1 hour, using moving averages, you have found a trend. Just plot your Fibonacci and find your entry level, set your targets, and then allow it to run itself. But then if you check from 4 hours daily or so, of course, checking those ones will help to strengthen your confidence on the trend you have spotted on 1 hour. Because if that 1 hour now agrees with either daily or 4 hours, that means that you are good to go. So you just set your trade and go and sleep. You just come back, you have picked your trade, maybe has even done 100% where you can move your stop loss and then either let it run or collect it. Because normally what I say, trading is psychological. So if you have never seen 30 pips or your trading in profit, in your trading career in profit before, and you've used this system and you see 50 pips, what are you waiting for to wait for you to go and hit the main target? Move your stop loss to break even and collect your profit and go. That strengthens your confidence to come back next time. It gives you signal until you master that to now begin to say, okay, I can allow you to run for days. Like if you are following our signal this week, I think it was on Tuesday or so that we generated a signal. It was later on I found out that I didn't study that very well, but still it was middle way. But we took the trade, sent the signal. It went against it by almost 60 pips and still came back. As of this morning, when I looked at it, because there's news coming this afternoon, I said, okay, please, if it does 30 pips, 20 to 30 pips, set break even. And of course, me, by the time it did 30 pips, I collected my profits. Okay, so move your stop loss to break even. This was a trade that I've been on since how many days now? So it got back there. So we picked it, and those who left it on, because a part of it I left it on, it came back and hit the stop loss, which was a 0 loss. Okay, so that's the way you can run this. But once you have generated something that I've not seen before, take it and come back next time. Keep coming back until you master it and it becomes a part of you. I hope it answers the question, sir.
Yes.
Thank you.
All right, thank you, Mr. Ifeanyi. I believe he has answered the second question that you asked. So I will answer the first question, but I would like to ask you first, do you still have access to your Easter Forest trading account? Yes, okay. So, you know, when our relationship with Easter Forest ended that November, we sent out broadcast and communicated with our clients. And as you know, what we did with Easter Forest, we were a channel of funding and withdrawal. But as soon as our relationship ended, we did not and do not at this time have any means to assist with deposit or trading, deposit or withdrawal for Easter Forest. But of course, the process to either make a withdrawal or deposit into that account will be to go to your client cabinet and go to the part to make withdrawal. I think you will see financial operations and then you'll be able to process your withdrawal. But of course, if there's any form of challenge regarding that process, there is the live chat support on the Easter Forest website, which you can always use to get support directly from them. And then they also have a support email, that's support@easterforest.com, which you can use to get support, from them directly. So that has been the process that a lot of the clients have used to get their withdrawals directly from them. Yes. So
I will try as long as I'm following you, I will keep you updated. But this one you have just floated, this Pipsoclock. The Pipsoclock,
yes, sir.
I'm sure you are not going to hang up somewhere again.
Well, we will not. Pipsoclock is not a broker, it's a community of forex traders. So for as long as possible, we will continue to support forex traders in Nigeria, in Africa, and even beyond. So what we are doing as it is we are dealing directly with forex traders. We are helping forex traders with the different resources that they need to become successful traders. And at different times, if we see a good broker that we can introduce, we will introduce them. That's why currently we are working with Skilling. We've seen their services. As a matter of fact, before we started partnering with Skilling, our CEO had to travel all the way to Spain to meet with the top management of Skilling to know if they are that credible for us to work with. And that's what we did before our partnership with Skilling started. So at Pipsoclock, we are here, we are always here. We are going to be here to continue to provide all the resources that you need as a forex trader to succeed in the forex market. So that's what we are doing. So we are here.
Okay, let me hope so. I keep on following you because when I started learning, I started with this forex. That's you now. Renamed, baptized to the Pipsoclock. So I don't have any other place to go rather than to follow you. Because the chief follows its shepherd. So I am a sheep, so I'm following you. So wherever you drag me to, then I will be there.
Thank you so much, sir. Thank you for trusting in us. Thank you for that. We appreciate it. And we'll be here together and we'll continue to support it. Thank you. So I have Mr. Michael Banner. You said the time for the webinar is not suitable for traders. Do you have any suggested time? Please put it in the chat box. We'd like to know what time do you suggest we have the webinar. Then Olukoya, you said, can you display the formula you supply in the Fibo property to add 50%? Mr. Ifeanyi, do you have any comments on that?
Okay, I'll drop it in the chat box. Probably, I think there's even, we did, okay. When you watch this video, you still see it again, but let me see if I can drop it in the chat box. But I know if I drop it here, some may not get it, but in the video, it will be repeated. And probably in the video by the time the webinar is uploaded, I'll still put the formula there.
Thank you, sir.
But let me see if I drop it, yes.
Okay, so you will get that. Okay, Unwaka, thank you for coming. You joined a bit late, but we are recording this right now, and at the end of this session, we'll put it in the member area for Pipsoclock, so you can always get back to that and see the recording of this webinar. We also have the recording of the previous webinars that we've held. We have it there, so you can always access it. So of course, our website is pipsoclock.com. We have the login, button there, which you can use to log in into your account. If you don't remember, just use the same email address that you have received emails from us to log in. If you can't remember your password, just click on the forget password, and then you would follow the process through to reset your password. Please, I'd like to be a part of your social media community. Okay. I do not know what you mean by that, but you can elaborate, or you can, please let me know what you mean by that. So I would once again want to appreciate everyone. We have come to the end of this session. Thank you for your time. Thank you for waiting till this moment. And we will have another session of the webinar with another topic. Then we will send out emails for you so that you can also register and be a part of it. And we'll continue to do this. Okay. What's your name, sir? We currently do not have a WhatsApp group or a Telegram group. For Pipsoclock, we do not have a WhatsApp group. We do not have a Telegram group, but our phone numbers are on WhatsApp. You can always send us messages on WhatsApp. You can send us messages on WhatsApp, but we do not have or operate any WhatsApp group at this time. So our email address is help@pipsoclock.com. And then, of course, you can, let me just quickly display how to contact us. So you can always send us an email address at help@pipsoclock.com, or you can call any of our phone numbers as displayed on the screen, 08066172403, or you can call 09038129463. So those are the ways to to get to us. And if you have any challenge with skilling, you can also always reach out to us. And you have our experienced managers that you have met today, Messi, Mrs. Adams. They will always be available to help you sort out whatever challenge you have with your trading or with your account with skilling. So that will be the end of today's webinar. Okay, yeah, help@pipsoclock.com. So that will be the end of today's webinar. I want to appreciate everyone for being a part of it. Thank you so much. And we hope to see you another time. We hope to see you another time as part of this session. Thank you so much, and bye-bye. Have a very great weekend. Bye-bye for now.